There can be just two candlesticks existing side by side with no wicks, okay, but having the same price tag of bases or highs. And if they have same bases and at the same price, it will be equal lows and vice versa will be equal highs. Now, when this happens, essentially, market does two things, okay, and 70% of the time, okay, what market does is it will take the support of these two highs and it will continue pushing higher if the market has made equal lows. And later in some moments, the market is gonna take a step down and take the liquidity out of these equal lows and then continue further. This is known as a sweep in liquidity. So that's another stuff which we have covered in here is that there can also be a reason to this push upwards is that the market may have created equal lows and the market pushed forward. And this price action coming back to sweep this lows can be of two reasons. Firstly, it can be because market made equal lows and it had liquidity below, or another stuff which we call as a side sell liquidity. What is essentially side sell liquidity? This can also be said as side stop liquidity, but both of them are denoted in short form as SSL. Okay. Now, essentially, when people are longing over here, they their people are longing over here. They have kept the stop loss below this wick, and the markets always love to take maximum liquidity, and the market makers, the persons who are running this market, they want to earn from that liquidity, from this retailer's stop losses. So they push the market further down, take this take the stop losses, add to the profits, and then reverse the markets. They reverse the markets in two ways. Okay, that is they either buy the position or that they close the short, which essentially also equals to them buying in the market. Now, what can be another reasons for this push forward? Now, it can be that there was an OB below since the market just had a volatile move. Now, most of the liquidity sweeps are a volatile move. At least 60% of the time, they are quite volatile. Now, a market also tagging or tapping in the OB can be volatile. It can also be said as a market sweep. Next, moving forward is why did the market go further up? Why exactly did it go further up? It can be that you're watching a pair, let's say for example Euro USD, and the pair dollar index or Dixie may have liquidity below. Now, please note that when Dixie falls down, Euro goes up. Essentially, any USD pair is affected. That includes even metals like ZAW or ZAG, that is silver. Okay, well, we'll come back to this topic of metals a little later, but here we are talking about essentially Forex. Now, it can be that USD dollar had some liquidity below, and the market was just going down to take that further liquidity, and then it when the dollar index it took that liquidity, it uh, took a bullish momentum, and thus the euro lost its momentum and it fell down. Now, why exactly did the market retest in here? It can be two to three reasons. Okay, it can be that either there's FVG in here, or maybe a order block or breaker block, and maybe that there was just nothing of much importance, a liquidity in here, but just a Fibonacci of 50%, which the market was looking forward to tap in to have the maximum drawdown potential. And that's exactly how it works. Now, the market went further down, maybe because there was again this side sell liquidity in here. Now, this is the perfect moment for me to introduce two kinds of liquidity. Okay, there's two liquidities in the market. There's internal and there is external. Okay, now externals are also called as swing. Okay, swing highs and lows are often formed in high time frame, while internal liquidities are formed in lower time frame. Now, how do you access these charts when you go forward? This is the best moment for me to introduce that along with internal and external liquidity. Whenever you are looking at a chart, for example, I open a chart of Euro USD, I will always go on the 1 day bias. Okay, 1 day bias. And I'll draw three things. No, four exactly. Four things. I'll draw Monday high or low. Okay, also known as MH and ML. I'll draw this using the VIX. Okay, previous week high and previous week lows. Okay, now just note that whenever market tags in to a to the VIX or the price in which these are resting, the market will always mostly take a sweep at this price level and will use that as a resistance or a support. Now, that is the analysis which I do on 1 day, along with looking for FVGs. This is move forward in 4 hour. I go down to 4 hour and I look for OBs as well in it. Another thing is that I draw down again. I draw down again and go to 1 hour and couple it with 30 minutes. Okay. In both of these, I mark swing high, and swing low. Uh, these can be also marked as SSL if it's a low or SSB. No, wait, not SSB. It can be BSL, buy side liquidity. If it's a high, it's a BSL. If it's a low, it's an SSL, or you can just mark SH or SL, as simply put. Now, it is better. I just want to know that it is better to mark SH and SSL when drawing a swing high or low. What is exactly a swing high or low? Let me just demonstrate that quickly in here. Let's say this is an up wick and the market is going down. This is another wick, market's going down. Okay, the market's just moving. Now, this is what is called as a swing high. Okay, and this is the first swing low. Okay, this was the first swing high. The market went below, took the liquidity of the swing low and went up, took the liquidity of swing high and went down. Okay, and this happens. This is an never ending pattern. The markets do mostly take out swing highs and low points, but The markets do take a lot of time to take those out. So always put your entries and stop losses in the internal swing points. Like this is an internal, this is an internal side sell liquidity. This is an internal buy side liquidity. This is an internal side sell liquidity. The market took way longer, way longer to take out the swing low in here or the swing high in here. This is all that you need in basics, except that the models. Now we'll get to trading models. There's